Hi everyone, welcome back to Be Rich. As you see today we're with Kesav. Anand is busy with something today, so we pulled in Kesav to have a chat with about how to go about investing. Before I get into that, Kesav, a lot of people seem to be annoyed that I'm drinking tea. It's just that I've been down with the flu, so to keep my coughing at bay, I keep sipping some tea. I hope it doesn't cause too much offense to people. A lot of you seem to be thinking, what in a 10-minute, 15-minute video? This Anand is talking and this man is sitting and drinking tea. These videos are not 10-15 minutes long, especially when you talk with Anand. They're over half an hour, 45 minutes long, and our editing team, poor guys, try to chop it up to the best of their ability and make it concise. But that said, this is the reason why I'm sipping tea now and then. You see me holding the cup. I'm sorry those of you who find it offending that I'm drinking tea. I'll try my best and ask my editors to cut out the portions where I'm holding a cup in my hand. What do you say, Kesav?
Yes.
Your generation seems to be very offended if a man is drinking tea nowadays. I
No,
guess it's
sir,
to do with our politics of the country right now. Drinking tea is a bad thing, is it?
I don't know why they put a comment like that. I don't know, sir. It's not annoying, but it's good only.
Must be one of your friends here.
No,
Must
no,
have
sir,
told
no.
that guy, hey,
No.
put one comment rather. Sir is like bothering me too much.
No, sir.
Tell him,
no, sir.
at least give me one cup. All the time he's holding a cup and he's not even offering me a cup. I'm sitting there for half an hour sitting and talking to him. He's not even once asked me, Kesav,
not
would
like
you
that
like
you-
one cup of tea?
Not like
Would
this.
you, Kesav?
Sir, not like that. You have flu, so you have to control your cough and.
Yeah,
that
I'm trying
thing.
my
So,
best to control it.
Super, sir. Sir, today we are going to discuss about how to pick a stocks.
Yeah,
On the
that's
previous,
what we tried to do in our previous video, which you don't watch at all.
No, sir. No, sir.
You don't even watch your own videos.
Sir,
And when the videos when me and Anand are talking, I'm sure you don't watch it at all.
No, sir.
Otherwise, what did me and Anand talk about last video?
Market capitalization, price of NSE and
That was the
BSE.
one before that.
Price of
Yesterday's
stocks.
video, what was it?
Price of stocks, I think so, sir.
Don't think.
NSE and BSE.
Why don't you take out? You have a phone, no? Just typical case of come to class, no notebook, no pen. Case of where's your notebook and pen? Left it at home, sir. How will you take notes today? I'll copy from my friends later, sir.
Sir, not like that. I will store it in my
We
mind.
tried to. At least I tried to get to Anand to bring about how a lay investor, like lay meaning someone beginning like you and me, who know nothing about shares,
Okay.
do not know anything about analyzing it, let alone looking at the accounts. How does someone who's beginning, we've opened our account, April 1st, you fooled
Yeah, sir.
everybody, we've opened the account.
Yeah, sir.
Now, how do we go about deciding what to buy? And there's so many companies. So I thought we'll first talk about the divisions,
Okay.
about large cap, medium cap, small
cap.
Yeah. So Anand advised, as a beginner, avoid small and medium cap. Try and look at large cap.
Large cap. Okay, sir.
Because the main reason being, small cap, medium cap don't have enough history.
Okay.
It's a small company, just started.
Okay.
It's a small cap. It's slowly growing, becomes a medium cap.
Okay, sir.
When it becomes a very large company, it's become a large
Large
cap.
cap.
Okay, that's a basic analysis
Okay, sir.
for you and me. We don't need to get into crores and this and that. Doesn't make it's too much information. It's like going and buying a mobile phone, and then you ask the guy, "Does it have a camera?" And he starts talking about the megapixels and all that. You're looking at the guy like, "Anna, I just asked, does
All
it
I
have
asked
camera?
It have
I
a
don't
camera
need
or
to
not.
know all this. Takes nice photo, okay."
Okay.
That's the
True,
level
true.
you and me are at share buying.
True, sir.
Correct. We're trying to expand our knowledge. So the important thing Anand says is focus on large cap.
Large cap. Okay.
Now, large cap itself, there's so many, right?
Okay.
How do you choose? So what Anand says, the second thing Anand said is, look at the guy who started the company.
Okay.
Okay, Anand looks always at the person who is running the company. That is very important.
Okay, sir.
Okay, when you get onto the bus, the bus driver doesn't look like he had a good night last night, or he looks like he was angry with his wife in the morning. That means that bus drive is going to be a little bad.
Oh, yeah.
He's going to hit every single pothole which he sees. He's going to hammer it and teach everybody in the bus a lesson.
True, sir.
But if he's looking happy today and he's smiling at you, you know your bus trip today
It's going to be happy.
pretty relaxing. He's going to be braking gently, and it's not going to be so bad. You can sit close to the engine and not worry about going through the windshield. Correct?
True, sir. True.
Yeah. So same way, the owner of the company is very important. So read a little bit about the owner.
Okay.
Find out his history, which requires no mathematics, which requires no accounting. It's just reading general knowledge. It's like reading news. So Google, type Ratan Tata, see who he is, this Tata family, what they are. Read about it a little bit.
Okay.
Talk to your friends, like that. So pick these companies based on, some are professionally run. They're not run by a family. Like ITC is not run by a family. ITC is run by a group of professionals.
Okay.
So see who are these guys. running this company.
Read about them.
Read about them.
Okay.
So this is the second thing, most important thing. Then there's two other things which we need to, now let's say you've read about these guys and you've got something like 50, 60 companies.
Okay.
Now is it the right time to buy these companies?
We have to see.
How do you know?
We
You
have
don't
to see
know.
how
I've told you this. Don't shoot.
Sir, listen, how it will performing in these days, we have to see.
What do you measure that metric on?
The profit and loss they are doing, they have debt or not, like that.
Do you know what all that is? I don't know. Do you know what profit and loss and debt and all that is? How to look at it, do you know? You're a new investor, right? So you type ITC debt and some numbers come. What does that mean to you?
If it has debt, it will not give more profit. According to me, sir, what I have learned.
Okay.
So, as
this is called shooting from the hip.
Okay.
Meaning you know a little bit from here and there. As you're going in the bus, you hear two girls talking. So you decide that is the place. They're going, more girls are hanging in that part of town. I must go there. There only I'll meet. Then you land there and you find out it's something else altogether. It is not what you thought it was. It's a famous story about my father. You know what happened to him? First time he went to Italy. Sorry, I'm telling you the story. People who want to fast forward can fast forward. He went to Italy in 1960s. 70s, he was there for 6 months in Italy. He did not speak Italian. This is way before the days of internet, mobile phone and all that. So 6 months he was there for some training. So one weekend, he didn't know what to do with himself. He was bored. And he's a vegetarian, doesn't drink, doesn't smoke. So he didn't know what to do with himself. So he saw a lot of locals standing near a building.
Okay.
So he thought must be a museum because it was a very old building. He didn't know how to ask these guys. So he also stood there. They're all waiting. Then suddenly around 4 o'clock in the afternoon, they opened the gate and everybody went inside. He also went inside. He went inside and he walked and everybody went into different rooms. They all split up. So he also thought, okay, and he also walked into a room. And guess what it was?
I don't know, sir. It was
a hospital.
Oh.
It was visiting hours. People had come to visit locally.
Now I understand.
That's how you're investing.
So
what you're doing is, Anand sir said debt. I heard about debt. Everyone says debt.
linking the two.
So if a company has debt, it means it's bad.
No, sir, it is not bad, but
it is not good.
It will not give so much profit.
How
because
do you know
they have
you
to pay the
spend
debts.
money to make money, okay, sir?
Yeah, sir, true.
Yeah.
But they have to pay the debts, no?
So if you have debt, you're a bad person.
No, not like that.
See. Then all your friends will become bad. Because all your friends have debt.
No, sir.
So, exactly. So the next two things he says which you should look at. First is something known as price to earnings.
P ratio.
Yeah. PE ratio. Right? PE stands for price. What
P
they're
is for
asking you to pay. Earnings is what they're giving you. What Anand always says. Value. Price is what you pay. Value is what you buy.
Get.
He tells you that all the time. He tells you. I don't know if it gets into you. So we'll break it down.
Okay, sir.
Make it simple. So price, the price which you pay for, and the value is earnings is what the value you are getting. Right?
Okay, sir.
So you being my friend, you have to pay a price. The earnings I'm giving is the value I'm giving you.
Oh, okay.
Every now and then I'm giving you some tea. Unfortunately, not today. But when I give you tea, those are your earnings.
Okay.
Simple as that. Right? So historically we see now. How do you know? Suddenly walk into the market. Everyone says PE ratio you look at. And these numbers are coming. Okay, usually these numbers are between 0 to 30. The range. PE ratios ranges between 0 to 30.
Okay.
And all these guys are throwing these numbers at you. PE 10, PE 12, PE 21, PE 34. So how do you know if it's the right time to buy that company? You look at historical average. Historical means going back as far as you can go back.
As the company started time.
Yeah. And the stock market. In India, we don't go back way back. In US, it goes a long way back.
Okay.
India, around 1990s, you can go back to. Get reliable information. Some companies can go back a little further, but you do not know if the information is reliable.
Okay.
We can trust it. So going back, we see historically in India, the average is around 15. If it's 15, that means it is not a good company to buy. It's not a bad company to buy. It is at correct value. The value is correct. There's not much that can go up or can go down, but it's at the correct spot.
Okay.
Right? If the PE 15 is higher than 15, let's say it goes 20, 28, it's going, that means it's becoming more and more expensive.
Okay.
You're paying too much money for it. For the amount of money you're giving, the value you're getting, it's not good. That means that's not a good friend.
Okay.
Okay?
Okay.
The same way you take 15 and the companies are below 15, that means there's a lot of potential. That friendship is going to give you lots of fulus.
Okay.
It's going to give you a lot of money.
We can have that.
There's a potential to earn.
Okay.
And you and me are long-term investors.
Okay, sir.
We are not doing this futures, options.
Future
We don't even
options.
know what the hell that is. So we don't even do that. We are only focusing on long
term.
We want to put some money away, forget about it. Then when we retire and we don't feel like working anymore, maybe tomorrow, we can take it out and retire and not spend it. Hopefully invest it again a little bit more and live off the investment. Never spend your earnings. Don't be quick to spend. So anyway, so the PE ratio is what you look at. And PE ratio, there's two types. There's something known as trailing PE. Trailing meaning the past.
Okay.
A person like you have been earning for last 1 year so much money. That's your trailing. That's what you've been earning last 1 year.
Last 1 year.
Then you have something called forward PE, which is what you might make the coming year. You're going to make some bonus. You might work some and get some incentive. You might do some side hustle, some extra gigs here and there, make some money. So you can say, sir, last year I made 20,000 rupees. But this year, coming year, I'm planning to make 30,000 rupees.
Okay.
So you have a trailing PE and a forward PE. Okay. Trailing PE. So the problem in all this is, just because you make 20,000 rupees, there's no guarantee you'll make 20,000 rupees tomorrow.
True.
So there are no guarantees in this. Should realize this. These are all like seeing the weather. If I ask you, Keshav, do you think it will rain today? You'll be like, I don't know. The weatherman said yes. Then it's sunny, then I can't blame you for it.
True.
Right? Same way, these PE ratios are just help you to sort out the stocks.
Okay.
So first thing you'll do is you take your 20 stocks which you've decided are large cap stocks.
Okay.
And you look at the PE ratios. So the ones which are above 15 are too expensive now. You can't buy it right now. The ones which are 15 and below, there's potential to buy. Okay?
Okay, sir.
That's one small difference.
Okay.
In financial companies, you do not look at PE ratio. You look at something known as PB ratio.
PB.
What is PB? There's a difference. Of course, there's a letter difference. Don't tell me that. Okay?
So I thought of that only, sir.
Yes.
PB ratio.
Price to book.
Price to book. Okay.
Okay. What is a book value?
I don't know.
Accounts, you have book. Correct? Accounts, it goes back. Dating, all these words always go way back. Accounts, you'll always have a book. No? What is that? Accounts book. All banks have an accounts book.
Yes, sir.
What is you write in the accounts book?
All the accounts of the banks, sir. Like
what is accounts? When a bank, what is the accounts? What is the bank doing? What does the bank basically do? You tell me that.
It will take people's money, deposit, and lend the money to.
Correct. That's all the bank does. What does the bank do? It says, Vinod, give me your money. I'll keep it safe for you. And because you're leaving your money with me, I'll give you a little bit of money. Add on to it. You trust me? And because of that, I'm going to add a little money to that and I'm going to give it to you. That's interest. Right? How does he make the interest? He takes that money, he finds this guy, he needs to run a business. He wants to open a dosa kada. So he comes and borrows that money from me.
True.
Correct? And I give him that money which you gave me. I have zero money. That's the best thing about being a bank. A bank starts with zero money. I just have to open. Keshav, trust me, bank. Okay?
Okay, sir.
You come and give me 10 rupees. And I'll say, I'll give you 1 rupee extra for every month for that 10 rupees. He'll come and say, I need some money to open dosa kada. I look at him and say, okay, man, I'll give you this 10 rupees, but because I don't know you, you have to pay me 3 rupees for the 10 rupees.
Okay. Oh, you will get a profit of 2 rupees?
I gave you the 1 rupee and I keep the 2 rupees for myself and I'm making money out of nothing. That's what a bank does. But this guy will come, you're the contractor. He'll bring the 13 rupees to you. I mean the 10 rupees to you. He'll say, Keshav, here's 10 rupees, build me the dosa kada. Okay, you will bring the 10 rupees and come and give it back to me. And say, sir, you're giving me 1 rupee, no? Here, 10 more rupees you take. Okay? Nice. And I'm making money now. Only 10 rupees, the same 10 rupees is going. But you think in your account you have 20 rupees. Okay, he needs more money now because he's given you and you tell him, boss, I said it will cost 10 rupees to build the dosa kada. But looks like I was wrong, I need 20 rupees. So he'll come back to me, say, hey boss, I need some more money. I need to borrow more money. I say, okay, I trust you. We've been paying so far very well. Here's another 10 rupees.
Okay.
So I'm making 3 plus 3, 6 rupees. I'm only giving you 2 rupees.
2 rupees.
6 goes away, 2 is what?
4 rupees profit for you. Nice, sir.
And he comes back to you. But all this is based on your 10 rupees. Your hard-earned 10 rupees you gave me, in case of trust bank you've given me. And I'm doing this. Okay, this is the simplest explanation for you and me and a bank. Why does a bank fail is if I start doing some mother goodles. I say, okay, why should I only make money here? I can also do some future options. and make some quick, fast money.
Ah.
Okay, and I'm not dealing with 10 rupees here. Now I'm dealing with 10,000 crores, 20,000 crores, and I'm taking money and I'm rolling it. This is what happened in the US.
Oh.
Sorry for digressing, going away from what we're talking about.
Okay.
It's off topic, but what happened in the US must be wondering, what the hell? Some bank failed. They're saying some Swiss bank is
Silicon
failing.
Valley Bank.
Yeah, what is that? How can a bank fail?
True. How can a bank?
Yeah, so I take the money, your money.
Let's talk.
Yeah, I've taken your money and I'm doing this rotation, right? Suddenly you have a doubt. In case of Trust Bank, you're scratching your head. Yeah, I've left all my money there. Maybe I should take that money out, just see if what happens. And you come and knock on my door and say, "Sir, I need my money back. I don't want the interest. Give it me right now." I'm like, "Hey, oh, you want 2 minutes? Huh? I have to go and get that money." Then you start getting nervous. You'll call your friend and say, "Hey, Macha, I tried taking it out today, but he's saying wait for 2 minutes. I don't know. Usually bank they give immediately. This ATM is saying wait." Everybody starts coming to the bank saying, "Give me money, give me money, give me." Well, the bank suddenly, he doesn't have the money. He's put all the money out. So he has to pull all the money back. So what happens when you try to sell something fast? You have to drop the price. So the loss starts coming.
That's why banks.
Yeah, banks say, hands up. He's put his hands up and he said, "Who will save? All public money, no?" Government is saying, "Okay, we will save." Where is government getting money? Your money.
Okay.
So all the way.
From here.
Exactly.
Okay.
Okay, this is the problem. I'll get to the second part of this video, which is going to be even more fun. Okay. I'll tell you how bank is ripping you off. We'll first finish this. So, first is PE ratio. Second is called book value.
Price to book.
This is only for financial institutions.
Okay.
For banks like Manappuram Finance. Because those companies only deal, their main business is what?
Finance.
Banks is finance. Lending and borrowing money. Right? So, you have to look at their book value.
Okay.
So, you look at something known as PB. PB is a ratio of 1. 1 is the middle number.
Okay.
So if it's below 1, it's a good opportunity to buy the bank. It is below value.
Okay, sir.
Okay, there's a lot of potential for that share price to go up. If it's gone past 1, right?
It's overvalued.
It's getting overvalued.
Okay.
The chance for growth is less. These are all averages. Okay, there's not rules.
Okay.
There are individual banks which are different. Like individual shares are different. There are certain shares. We see the PE ratio would have never come to 15. It will always be 30, 40, 50. It will be sitting there. You look at it for 5 years, 6 years. You say, "Sir, what are you saying? 15 has never come down." That's exceptions.
Okay.
There are Tendulkars. Everybody is not a Harbhajan Singh. There are a few Tendulkars who will come and hit 6 like Yuvraj Singh. You and me will get out like Harbhajan, first bought. Okay. So don't take the exceptions. Take average. Same way if you look at the banks in an average. That's why Anand say, this is a good bank to buy. If you look at their price to book value, it will be below 1. That means there's a chance for this bank price to
come up.
Share to go up. The market is undervaluing it. So these are two things you should look at when you decide to buy.
Buy a stock.
So you look at the PE and segregate. Keep it separate. And out of those comments you looked at, some of them are banks. Then look at the PB ratio and separate. And then you'll have 4 or 5 stocks. Mix of banks and other industries. Big industry shares. Which, okay, saying, "Sir, I looked at it. This looks very interesting. The PE ratios are low. The PB ratios are low." Then we start looking at it individually.
Okay.
Then we do what you say. We go look at the balance sheet, what you hate the most. In the balance sheet, what you look at is, you actually see how is the business doing. When you look at the account statement, you see amount of sales they did, amount of money they made, amount of loans they're paying.
Okay.
Loans are liabilities. Cash, which is coming in, is all our assets.
Okay.
So you look at the assets, which is all the cash which is coming in. I'm taking it very simple, okay? Not talking about all complicated.
I understood.
So you look at all the money coming in. Look at all the money going out in terms of loans, salaries and all that. What is this business doing? Then you see it for 2-3 years. Is it doing well? Then there's something to investigate further and see if we can invest in this company.
Okay.
Okay. So we've opened the first few boxes we've opened and seen. Now can we review? Okay, sir. What do we do now? Today, 1st of April, we've opened your account. Now, what do you do after that?
Sir, after that, I will segregate some companies to buy, large cap companies.
Very good. Point 1.
Then I will...
100 marks. Next point.
Then I will see the PE ratio of the company.
Fantastic, man.
If it is a financial institution, then I will see the price of book value.
Very good. Then you've done it.
Then I will take the 2 and place it somewhere.
No, place it somewhere.
Okay.
And what is the PE ratio should be?
PE ratio should be below 15.
Very good. And PB?
PB has to
Be
be
below?
below 1.
Very good case. So then,
Uh,
and you said you find this very hard.
Yeah.
Was this hard?
No.
We spent 20 minutes talking.
Yeah, sir.
And you have already come more than 75% of the bridge you have crossed.
Then we have to see the balance sheet
Yes.
of how the company is doing.
You do this itself, Anand sir will be very impressed.
Okay, sir. I will do that, sir.
So, 2nd April, you come and say, sir, I only looked at large cap.
Okay.
And I found this. And the reason I looked at these companies is because the PE ratios are like this and the PB ratios are like this. What do you think, sir? I read about the owners of these companies, the people running these banks.
Okay.
They seem to be very good people. You say that. Why you think this? You tell him that, he'll be very impressed.
Okay, sir. We'll do that, sir. Sir, there is a saying called if you have to buy a stock, sir, there is a way to buy a stock. If we invest on daily products, sir, daily usage products like paste, brushes. If we go to a supermarket and stand in front of the supermarket and we see how the product which impress people more, which people buy, we can invest on that stock.
Sure.
Like that.
Sure.
It is a good way to invest, sir.
See, these are anecdotes.
Okay.
Anecdotes means one-off story.
Okay.
It's like going back when we spoke some 6-7 videos ago. If you're a college dropout, doesn't mean you're going to become Steve Jobs.
Okay.
Just because you see everybody buying Colgate toothpaste coming out of Nilgiris, doesn't mean Colgate toothpaste is the only toothpaste in the market and it's going to do very well. Understood? There are many supermarkets.
We have to do the analysis.
Yeah. It's an anecdote.
Okay.
The reason why they talk about the story is it's to get you thinking. The reason why they say college dropout and he became a college dropout is that even with many failures, Steve Jobs became a success. That is the essence of the story. The essence of the story is not to become a college dropout. Same way, the essence of the story is not to go to the Nilgiris and take stock of what people are. The essence of the story is to see, study the market.
Okay.
That is the essence of the story. The essence of the story is not to go take stock on what is happening.
I thought
that's
like
anecdotal. Right. What you are trying to do is see how, by and large, do people in Tamil Nadu like using this product?
Okay.
What is their preference? How much are the sales? Then see the competition. Is Palmolive doing better than Hindustan Lever? What are the Hindustan Lever brands? You're going to buy ITC, right? What are all the ITC brands? Don't tell me just the cigarette brands.
No, sir. Classmate notebooks. And
FMCG, what are they doing? What is FMCG? Blink. Yes. We'll do that in another video.
Okay, sir.
Okay, where we talk about FMCG.
Okay, sir. We'll do that.
There's another important thing which I want to tell you is about your generation, which is about buying home.
Yes, sir.
Right? You're always encouraged when you're young. First thing you should do is buy a house. Correct? And everything in life is settled. Once you get that home loan done, get a job. The reason why you need a good job in a good company is so you can get that salary certificate and go give it to the bank. So you can take the home loan and you can go buy that flat. Life is set.
True, sir.
Done. You've done the home loan. No, you're not. This is another way our banks and our society is structured such that you're getting ripped off. Let me give an example. A 40 lakh home. Back in your hometown, a 40 lakh flat is, you'll get a good flat which you like?
40 lakh, not in 40 lakh we can get.
Okay, we'll assume.
Okay, sir.
Okay.
We'll assume.
So imagine you yourself don't feel like you're thinking about your hometown, the area which, that road which you really love. And you're like, man, 40 lakhs is not going to buy me that. You're saying that. So imagine I'm looking at money 40 lakhs.
Okay.
So you can multiply whatever number you want in the example I gave. Home loan rate is around 9%.
Okay, sir.
Okay. 20-year loan. What will be the EMI?
Sir?
Guess. I know you can't calculate. You're not an accountant.
Yes.
Okay, I'm not.
40 lakh means.
It's like me asking us.
20 years.
Just what do you think you'll be paying? What do you think you'll pay?
4,000 to 6,000 per month or 40 lakh.
Okay. I was about to spit my tea out. Then I had to hold myself back.
20 to 25,000.
I wish. You'll be paying around 35,989 rupees.
Per month.
Okay, per month.
Oh.
That's the commitment. So just for 40 lakhs.
40 lakhs.
And you're saying that is not enough. Okay. So imagine.
Now it's enough.
Sir, I'll walk to office every day, sir. I have to buy that home. I promised my father. So this is what I'm trying to tell you. A 40 lakh loan, 20-year, right, 9% is 35,998. Okay, the principal is 40 lakhs. So you have paid it for 20 years. How much do you think you would have paid the bank totally?
Per month, if
You know you're paying around 36,000.
36,000.
Do the math. 20 years. 12 into 20.
Ah,
If you're good at it. If you're not, just say, sir, this is too much headache for me in the morning. Don't do this to me. I have the rest of the day to do with Anand sir also, money page video. I feel very tired.
1 year, 12 months.
36, 12 into 20. I suggest what you should do first is
12 into
12 into 2 is what?
12 into 2 is 24.
24 into 36 you do. And then you just have to add a 0.
Okay, so 24 into 36. 20 into 36. 36. 360.
Okay, we are clicking. People are like
sir,
watching.
1 minute.
It's like watching
720.
Doordarshan animation logo for people.
720. 864, sir.
The zeros you forgot to add. That's because he showed you off screen.
Sorry, sir.
The calculator he shows you. You're like,
No, sir, I got that. 864.
86 lakhs, 37,369 rupees you would have paid. How much would you have paid the bank?
86,000.
86 lakhs, 37,369 rupees you would have paid. For a 40 lakh
40 lakh loan.
You paid more than?
Double the amount. Oh,
That is the money he's making off your back. Okay.
okay.
Now let's do the fun part.
Ah,
Let's say you don't buy the house. You tell your father, I'm not listening to you.
okay.
That 35,000 EMI, I'm putting it into an index fund. Like Anand has been telling me.
Ah,
Everybody in my family say, Kesav, house, important. Money, not
True,
important. Investment, 22nd.
Ah.
First investment, house.
House. Ah.
What are you doing, Kesav? You say, no. Anand has told me better.
Ah.
I'm putting in an index fund.
Hmm.
Okay. 13% is they saying conservative.
Okay.
Okay. 20 years. So you put 35,000 rupees every month for 20 years.
Okay.
13% return. How much do you think you would have made? You would have invested? How much?
35,000.
Hey.
Sir,
Totally 20 years, how much you would have invested? We just spoke the number, huh? What you would have banked?
86 lakh.
86 lakhs. Forget the balance.
37,000.
86 lakhs you would have invested. You would have invested 86
86 lakhs.
How much do you think that 86 lakhs will be valued at 20 years from now? There's no way you can calculate it. Just
Yes,
guess.
It will be on crores. 2 crores. More
Okay,
than
2 crores
2
you're
to 3
saying.
crores.
4.12 crores.
Oh,
Oh.
close to that.
Was that a burp? I don't know.
Compound.
Just feel like you ate something and oh. Anyway,
No, sir. Process of compounding that happens.
whatever it is.
Ah.
Okay. Like I said, we are layman. We put petrol in the engine, car starts, we're happy.
Ah.
We don't care how the petrol is burning. As long as it's giving good mileage, we don't care.
True.
Same way this is. Okay, let's not get into it. It's giving you good mileage. So you get 4 crores.
4 crores.
Okay. Do you think a 40 lakh apartment you bought 20 years later will be worth 4 crores? Apartment you bought, remember that. It's not land.
No,
You
sir.
bought?
No, apartment. No.
It will be a 20-year-old building.
Ah,
Do
true.
you think someone will pay 4.2 crores for a 20-year-old flat?
No way. Ah.
At maximum, you'll get 1 crore, maybe 1.2 crores. That's about it. That's my conservative estimate. Okay. So now everyone will question, your father will say, 20 years, but you know 20 years from now you will have a house here. Even if you don't have a job, you have a place to stay.
That
You
is
may
the
not have a
common
job.
saying.
A
sir.
common saying is what? You have
If
a
you don't
place
have
to
a
stay, you have a roof over your head. Nobody can throw you out.
True.
Right? But now it takes that 4 crores. Take it all out and you put it in a bond.
Okay.
Right? Which gives you 10.5%, let's say. An average bond. How much will that monthly give you? Hey, help him. How much is 4 crore on the 10.5% ivlo?
Wait, sir. He has to put the percentage.
Yes,
Do you know how to type 4 crores?
yes, sir.
You come here, cameraman. Stand to everybody show. Introduce yourself.
No, sir. Take it.
I don't know why everyone's so scared to come on the camera. It's only case of. I understand if Anand is here, you're feeling nervous. Cameraman Chandar, yes. You guys see in the video, and this is Karthik, no? Yeah, Karthik and you see Chandar, no? These are the guys who are always helping Kesav out. We're always wondering in Money Page, how does Kesav know the answer? It's these 2 jokers who are Googling and telling him the answer. Forget it.
Okay,
This
sir.
is big number, no?
True, sir.
Right? So now let me tell you, 10%, 10.5% a year, right?
Okay, sir.
This is the interest which you will make per year on a bond, 4 crore bond. That's 42 lakhs.
lakh.
Divided by 12 per month. This is 3.5 lakhs you'll get a month. Okay? But your father will say, Kesav, today's 35 lakh rent, 20 years from now, you won't be paying 35 lakh, boss. You'll be paying lots of lakhs for the same apartment rent. Inflation, Kesav. All your fans will be telling you, Vinod sir is lying, Kesav. Inflation will take the rent somewhere else. I used to rent a house for 1,000 rupees, your father will say. 20 years later, that same 1,000 rupees will not get me a flat. You'll say, sir, then what will I do? 3 lakh 60,000 won't be enough for me per month to rent a place. So, for that argument, we take inflation calculation.
Okay.
35,000 rupees, let's say you're paying the rent. That's the EMI, no?
Okay,
so, your house, if you're renting that house, you're paying 35,000 rupees. That's the EMI. 20 years from now, how much will that 35,000 rupees inflation be equal to?
I have no clue, sir.
1,56,000. That's all. How much?
I have 3.5 lakhs. So
what is worth 35,000 rupees? 20 years from now will be worth around 1 lakh. It will cost you 1,50,000 to rent the same place. Approximately. Not the same exact place. Equal.
Equal to that.
Apple to apples.
Okay.
Inflation, if you calculate inflation. So you're getting 3,60,000. You take away your rent. 1,60,000, let's say, is your rent. 2 lakh, let's say Vinod sir is completely wrong. 2 lakh is your rent. You take away. You're still left with 1,60,000 to
1.5 lakhs. To survive.
Correct?
Yes, true.
So now your question will be, sir, but why? If this is true, then why is everyone buying a house?
Sir, I don't ask that because
you don't ask anything, man. You're the very smart guy. You know what the best thing about I like about you, Keshav? You have no questions.
No, sir.
You're an incredible guy, man.
Sir, no, sir.
I always ask you, Keshav, you have any questions? No, sir. No questions.
Sir,
but you're very smart. You never say, I know it.
Sir, I came to say that our parents' generation, no, sir, they used to say, if you have a home, you are a...
You're absolutely right. In your parents' generation, it made a big difference. Because there was no market to invest in. Back then, when your father was your age, was there a stock market?
No, sir.
There's only very few opportunities to invest for a middle class person to come out and become rich. You can either invest in gold or you invest in land. Land gives you security.
Okay.
Now, another reason is your father's generation, if you go 2 generations back, they all lived in the same village or city, generation after generation.
Okay.
Your great-grandfather and your grandfather and your father all lived very close to where they all were born. Do you?
No, sir.
That's the next thing. Let's say you buy Kesav, a flat. With great difficulty you've paid, like a fool, giving the bank an extra money. 46 lakhs you're giving extra, and you have that 40 lakh flat now worth 1 crore. And you have 2 children, both are in the US. They're like, Dada, you're going to die. What will we do with this flat? You're like, you can sell it. Is it easy to sell a flat?
No, sir.
How difficult is it?
It's so hard, sir, to sell a flat.
So even if you're looking at it as like an investment for my children, you're not investing for them. You're giving them pain in their neck.
Okay.
So, they're not going to like it. Would you like it? In the middle of some gramam, somewhere your father has left one flat for you.
It will be a huge headache for me, sir.
Yes. You have to go there, find one broker, pay that broker commission. True. Then you have to chase him. Sir, did you find a buyer? He'll say, sir, you wanted 80 lakhs, but market is only saying 60 lakhs. How do you know? The guy could be selling it for 70 and swallowing, na?
Yes, sir. After so many fed-ups, I have to give that amount.
Whatever he says, finally you have to say, okay, to hell with it, take it. Imagine how your father will feel. Every month he paid that EMI and he thought 1 crore is left for you and finally you're selling it for 60 lakhs and saying, to hell with it.
Then my father will definitely say, why do you buy a home?
Thankfully,
you'll ask, sir.
Parents are not around to see that kind of failure happen.
True.
So, this is another reason. When you invest, 2 things they argue. One is security, which is rubbish. It's not true. Okay, I've proven to you, you have security. Second thing is, in case you want to give it to your children.
Okay.
As a child, you rather would have 1 crore given in hand than 1 crore worth of property sitting somewhere in some foothill somewhere where you have to go and try and sell it. Right? Cash in hand is always king. So this will give, if you have to give legacy to your children, you're going to give them cash, 4 crore cash. The other thing they say is, let's say you're married and you have children. Suddenly something happens to you. At least your family has a house. That's only if you paid the EMI, no?
True.
If you have not paid the EMI, the bank will say, hey, get out. Sorry, your husband died. Very sorry. If you have luckily taken loan insurance, You can process that paper, they'll close the loan, and your house is left. But why pay the EMI? Take insurance also you're paying. For the restaurant, you just take one general insurance. Anand always says, no, if you have no asset,
Okay.
you have no money, you have zero money, zero, parents are not going to give you any money, but you have a family, young family, and you're worried about them, if something happens to you, take one general insurance policy. Whatever the amount you want. 1 crore, 5 crore, 10 crore, whatever crore you want, take it. Pay that general insurance in case, and it's very cheap because it's only a general insurance. The family only gets the money if in case you
Die.
yeah. So it's cheap. Buy that, taken care of. Security is there for your family. Don't burden them with this.
Understood, sir.
Understood? So this is the reason I tell you nowadays, think 2 times. So who is the one who's making the money in all house sales?
Bank. No, got that, sir.
So next time you see a guy say, I'm a banker, look at him like, hey, boss.
Move away. I will see.
Even a doctor is better. A lawyer is much better. Never trust a banker.
Okay, sir.
My father would tell me 3 things you should have. One is a good lawyer,
Okay.
a good
Doctor.
auditor, and a good doctor.
Okay.
You should have 3 people in your life. You should be good friends with. Auditor, lawyer,
Doctor.
and doctor. No one will ever say, have a banker. Because if you have a banker, he'll make sure whatever you have, he'll take it away from you. That's what investment banking is all about. Take your money, take his money, combine Chandra's money, Karthik's money, make it into a nice big fat thing and
Give it to
gamble.
someone.
Gamble and see what happens. And if it's too big to fail, government is there to
Help.
help. That's what happened to Credit Suisse, all these other banks. Government will always come and bail me out because it's too big to fail. Public will lose trust. And this is not just now, this is historically. Even the British Empire used to go start wars. Most of the wars in history was started because of bankers who needed to get their money back. Okay. The Greek, there's a famous war where the British Navy went and fought the Ottoman Empire. Okay, these are all strange names to you.
Yes, sir.
But Greece is a country. Okay?
Greece is a country,
Yeah.
sir.
They were ruled by Turkey.
Okay.
Okay, I'm breaking it down very simple. They were ruled by Turkey.
Okay.
Turkey was ruling. The people in Greece didn't want to be ruled by Turkey. So what they did is they went and borrowed money from people in UK.
Okay.
The British people borrowed money to fight the Turks. They started losing.
Okay.
The people who lent, the banks which lent money to the Greeks got scared. Because if they lose the war, who will pay the loan?
They don't
They
get
can't.
the
So
money.
they told, the bankers told the British king,
to help them.
the Queen, Victoria Queen, boss, we're going to lose lots of money. You bloody go fight and save the Greeks. So the British Navy came and hammered the Turkish Navy, pushed them back, and the Greeks won.
And got the money back.
But did they get freedom?
No, sir.
They only got slavery because they owed all that money to the British banks. They had to pay the British bank the money back. This is throughout history, you will see this. This is called capitalism.
Capitalism. Now connected, sir.
All connected. All the dots connected.
Connected, sir.
So my hope for you and all your generation is that you also make money.
Okay.
Why should the bankers only make money? Through all this effort, me and Anand, whatever we do is to encourage you guys to make money yourselves. To break out of this cycle. Okay?
Okay, sir. Understood.
Did you enjoy today's talk?
Yeah, sir.
Was it entertaining?
Yeah, sir. True.
So you learned a few things?
So much things, sir. Like how a bank works, how to select stock.
Correct.
All that, sir.
So you're going to go buy a house now?
No, sir. No.
Very good.
No way.
But you'll be able to explain this. Here, carry this with you.
Okay,
So you have this calculation with you. So next you can go tell one of your friends.
No, sir. I will take a pic of this and send it to my father. He will call me what all of this. I will say that to him. I also take out the thought of buying a house from his mind also.
I hope it works.
Thank you, sir.
In all probability, he'll curse you and me. Alright.
Okay.
Chalo. Thank you for watching Be Rich, guys. And Keshav will sign us off.
Thank you for watching Be Rich. Today I have learned so much things. Today the one who is watching, who is new to this channel also learned something, I think so. So follow the channel regularly, hit the like button, share and subscribe your channel. If you don't hit the bell icon, you will not get notified. So please hit the bell icon. Thank you for watching.
And all of you who want Keshav to cover the same topic in Money Pechu as him as the main person explaining this to you in Tamil, please put the comment down below and like it and push that comment up. So then we'll get Keshav to cover the same topic by himself in Money Pechu where he'll explain what he's understood.
Yeah. Thank you for watching Be Rich.
I propose to visit to the city of Singapore between April 30th and May 1st. Whether you would like a meeting on 30th April or May 1st, I leave it up to you. If you wish to contact me or attend that meeting, please send a message to the WhatsApp number given below and drop a mail to the mail ID given below. My team would get in touch with you, finalize the venue and the date, and we'll put out one more ad. But those who desirous of meeting me in Singapore in the last week of April and the first week of may contact the WhatsApp number below or write a mail. Thank you. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.